Good morning, everyone. Hi, my name is Michael Naidrich, and I am the co-CEO of AmeriVet Securities. And as always, I am joined by my partner, CFA, all things rates, liquidity, Fed, Gregory Faranello. Hello, Gregory.
Good morning, Michael.
Well, this is what I
Yes.
love about what we do. It's August 28th, I think, or something like that. And, the calendar says you should be ready for Labor Day, but the markets say, no, no, sir. Stay right here and let's chat. So I thank you for initiating this conversation this week. And I want to jump right into it. This isn't a Fed meeting, but in a lot of ways, it's just as important because tonality and words matter. And I know you're big on words and more certainly maybe the messaging the words are saying. So the chairman was in Jackson Hole, which I'm sure is a pretty elite event. But he just spoke to the high-powered executives at Jackson Hole, and I wanted to get your first gut reaction, right off the jump ball.
Look, I mean, I think the it's great to be on with you, and I couldn't agree with you more. Summer days and on Wall Street are not the same. But it, from his perspective, I thought he did a great job. He's a very smart guy. He's a stand-up guy. I think the message was pretty clear, somewhat muted at times from my perspective, but in the end, the Fed is focused on inflation here. Uh, I'm not, I'm not really too sure. From my perspective, I'm not, I'm not terribly worried about inflation, but if you look at things from a standard metric, inflation is running way above their target. So he's got a committee to deal with, and his committee is hawkish right now. I mean, there's no question about it. I mean, you see it. I mean, I'm looking at my screens right now. You see short end yields are going up. The curve is, 6+ basis points tighter. And, you know, he's he's got to manage that process. So I appreciate the seat he's in. He's not in an easy, difficult seat right now, from my perspective, but I think he'll manage it. I think he's a smart guy. He'll know how to manage it. But the Fed may need to go a little bit higher here, and
Yeah,
in the end,
it's
I
interesting.
don't agree. I don't agree with it, but they may need to.
It,
He
it's
may
it's
he may need to. Yeah.
He may need to, and you're right. There's a lot of people on this committee that are pushing for it and out there pretty publicly saying there's a need for this. I agree with you. I find him almost mesmerizingly brilliant when I hear him speak. He's got command. He knows the messaging he's sending. He stays on point. He's he's got a great personality. Like when he needs to have it, right? Like what I wonder though is, you still have to deliver, and he's still threading a very difficult needle, right? And that's whether you're the new chairman, you're a new CEO, a new role. There's always a little bit of a okay, you get a little bit of pass for the old world, and you get a couple of months or a couple of meetings for your new world, and then people want results, and I was kind of leaning towards you, and it's not surprised because you've given me so much education in this. I was kind of thinking he may not raise rates at all this year, believe it or not. That's what I was thinking, or I think that's what he was thinking. But in listening and hearing all the outside pressures, and when they have such a you know dogmatic goal to get to the 2% inflation rate, it seems to me that they may have no choice. But again, I'd love to hear a little bit of that.
Yeah, so he didn't change that narrative at all. So if you don't change that narrative and you're managing a committee, and we'll see. I mean, we'll get, today was a big day, but you'll get some more data before September. I don't think he wants to raise rates, but I think he may have to raise rates at some point to gain some credibility. And look, the data is what it is. He formed a committee, and From my perspective, I think that's smart. You want input from, various people, and you want to form, a certain opinion over time. But he is the Fed chair. At a certain point, if inflation and the data short term has actually been pretty friendly. I think the economy is in good shape. I mean, we've written to this about
You've been
to
steadfast on that. Yeah.
yeah, to our clients. I mean, I've been steadfast about not only the economy but markets in general. And but at some point, he's going to have to do something. And the timing on that is a little suspect right now. But if the inflation data does not cooperate in the coming cycle, he may need to push rates a little bit higher. I don't
Can,
want to see it, but
can you explain to the viewers let's just say the inflation data does not cooperate and they're at the September meeting and he decides, you know what, I want to give it one more look, right? What's the risk? Explain to me the real risk to him waiting till October versus September if the
well,
data
we're we're
doesn't.
we're priced for it. I mean, if you look at the Treasury curve, I mean, rates even today, I mean, Treasury rates have already priced this in, so it's a matter of formality in terms of what they want to do. In the end, a little bit of tightening wouldn't be unfriendly, I think, to the Treasury market. We'll probably flatten out the curve a little bit more, which I'm not in favor of. But in the end, he may need to nudge it up here a little bit. 25, 50 basis points. We'll see. I mean, to me, today he was, and I'm not surprised, he was non-committal, but he was certainly hawkish. There's no
He was
question
wrong.
about it.
Okay,
Yeah.
so here's a good question. Yeah, or I guess I think it's a good question since I'm the one asking it. If he does decide to move, do you think he just says, let's go 50 basis points in one shot, or do you think it's 25, 25? How do you think he thinks about that?
No, he's not going 50.
Not
No.
going 50. Okay.
Yeah.
It's gonna be
Yeah.
gradual.
I think so. And look, I mean, September is on the table. There's no question about it. But no, I mean, I I don't think he's looking to ruin the economy. So I think the rate path, if they start to move in a different direction, it's going to be gradual. And I think he'll telegraph that. He's very thoughtful. I mean, it's not,
Really is.
and I don't think he wants to raise rates, but he may have to at
Okay,
this
so
point.
so let me ask you another question. As this always happens when we speak, more questions. I always have more and more questions. Because I appreciate the conversation. The Fed is an independent organization, but midterms are coming up. What's the pressure like in his seat to kind of try not to?
It's meaningless. The whole
Just
thing is meaningless. I
all
mean,
noise, all conjecture.
I think so. I mean, it's well, there's a little back and forth between him and Scott B, right? And and I get that, but in the end, it's meaningless. I mean, if he raised rates in September, it's not going to mean anything in terms of the midterm elections at all. Inflation, and we are elevated right now. Inflation just doesn't like, and if you look at the inflationary pressures right now, they just don't come down instantaneously. So I he could raise rates in terms of the midterms, in my view. Uh, I think it's likely the president loses seats in the House, and that's not because of interest rates. That's because of the overall environment, and the overall environment right now is affordability and the telegraphing around that. So where that came from relative to where it is now, I think is largely irrelevant because it came from a different place and time. And I don't think a rate hike here or there is going to matter in terms of how the midterms shake out.
Got it. All right, let's end it on this point or this question. I get the sense that if you were in the seat, you probably wouldn't be of the mindset of raising rates if you didn't had to. That being said, we're sitting here, it's August 28th. If we're having this conversation on uh, December 31st heading into the new year, did he raise how many times in total amount?
I don't think we need to do anything right here, rate
I know you
wise.
don't, but what do you think? I'm clear on what you think.
So, but
I got eight
uh,
years of doing this with you. I know exactly what you.
um, look, we can get 50 basis points higher from here. You can get the Fed funds rate to 4. If you look at the Treasury market, they're calling for hikes, which is fine. But in the end, I don't think higher rates really solve much from here. And growth is good, the economy is good. We're running big deficits, so I think for new Fed Chair Warsh, I think the pressure is going to be to keep things where they are right now. He's not going to lower rates, and he may have to higher rates a little bit, but that's going to be in his hands. But if you look at the fundamental markets right now, the fixed income markets, we're already priced for that.
Yeah. All right. Well, buddy, I thank you for your time. I know it's Friday in August in the summer, and you live kind of near the ocean, so I think I'm
I'm
gonna
gonna be
wish you.
I'm gonna be off next week, just so we
I,
could. Yeah,
I know that, sir. I know.
yeah.
Like I said, 8 years together. I know the patterns. So I wish you a good week off, bud. Enjoy the end of the summer here until Labor Day. Always appreciate these conversations, and be interesting to watch. I will. I'll make you a friendly wager for lunch for entertainment purposes only. I think that there will be no raises through the end of the year.
All right, I love it.
All right,
Yeah,
that's just me from who I learned from. Other than that, I appreciate you, bud. And if anyone has any questions, although Greg is off next week, I will tell you that if you want to speak to me, he'll always make himself available. So I appreciate you all, and have a great week.
thank you, Michael.